This one's from Jen. I've done really well from my Perth property I bought in 2023 for 550,000 and now it's worth 700,000. Should I sell or look into buying in Melbourne or another growth market? So, the median price in Perth has just been pushing along, kind of went through that period of stagnation and now it's kind of jumped up. But I guess what we are basically talking about here is jumping from one market to another market, and we've got to understand a few things. So, firstly, what's your goal? Like in terms of why are we selling? Is it because we've made, it's not a little bit of money, we made 150 grand or so, and that's a really good return for us. But, if we're needing to buy into another property, is the, taking out equity to go into the next market possibility to us? Because you've also got to understand is that if you sell that property, you're going to have the cost of selling. So it's not just about paying the agent, you're going to have capital gains tax. Then when you buy that next property, you're going to have to pay stamp duty, building and pests, etc. There's a lot of buying costs, selling costs, holding costs. I'm not a really big fan of buying from one hot market and going into the next, unless you're using that debt to help pay off a mortgage, or bad debt is taken away in the same process. So that would be the first one that I'd probably look at. Because also too, it's kind of what returns are you actually expecting from the property? Because it's really unrealistic to jump into a market and you've seen 20-30% and expect that you're then going to go into your next market and go 20 to 30% growth. I'm going to go from this market to the next market. Yes, that might work. It's like day trading though. Like most day traders go broke when they follow that route. It's normally the long-term investors that do the best. They buy good quality shares in good quality businesses. They typically tend to do well. So, I mean, if you've got your good growth early, that's fantastic because that might allow you to go down the debt reduction or expand the portfolio. But good returns of 6% to 7% is really what you should be looking for. And that's not, if you're seeing that that's going to be where you're probably going to land over the next few years, I'd still be holding onto that asset, unless that area has reached its potential. So some of those reasons might be that vacancy rates have started to really blow out. Days on market have started to exponentially blow out, which, just as an FYI, that's not really been the case in Perth. Population growth is starting to dwindle, also not the case in Perth. So it wouldn't be something I'd be a big advocate for. More about buying well, building equity, holding. We'll sell when we need to, not chase the market, trying to catch falling knives. Not really a big advocate of that one as well. But